Hey traders, TG Watkins here. It is May 3rd when I'm recording this. Hope you guys are doing well and enjoying your weekend. We just cashed in 265% gain on our SPX options trade. We also cashed in some FNGA and some Bitcoin BitX leverage ETF. We are doing great. This market is fantastic. We've been catching every single twist and turn with this market, including the dip that happened on Wednesday. I'll show you guys what that looked like. And I think we're going to be going higher. I'm going to be talking about how I think that the SPX can go to 6,000. It's kind of my next projection. So I'm going to give you 3 reasons, maybe 4, as to why I think that might be happening. So stay tuned. Remember, this is for educational purposes only. Like and subscribe, hit that button so that way you can get these videos when they come out and you can actually see what's happening and stay updated every week. All right, guys, so we have FOMC coming out on Wednesday. This is part of why I would love to see if the market can actually pull back or consolidate or flag at the early part of next week, so Monday, Tuesday, Wednesday, because markets had really good move for a week and a half. It's getting a little bit heated. I'd love to see a pullback, and then I think that would set the stage for kind of our next move up. We've also had a combination of bad news is good news. We had weak economic data. That's what pulled the market down on Wednesday. If you remember right here, we had that little dip right there on Wednesday. And then, but then we had the jobs report, and actually it came out strong. So I think that the economy is kind of in this area where, yes, it's showing that it's overall slowing down, but not terrible and not falling off a cliff. So this maybe gives Jerome Powell a little bit of stuff to work with. We know that he's kind of had an issue with Trump, and he's like, okay, look, number one, I'm not going to quit my job early. I'm not getting fired. And number two, I'm not going to be lowering interest rates as a knee-jerk reaction to the market coming down based on these tariffs. He's going to, we're going to let the dust settle. We're going to figure out what's happening. And then, we're just not in a hurry to react. But given that the GDP and some of these numbers are starting to show some weakness, maybe they will start to indicate that they're going to be cutting rates again at some point. We are expecting it. The market is expecting rate cuts kind of in June. We'll see how that goes. Definitely not this one in May. And so I want to see if he starts talking a little bit about forward guidance about yeah, we're going to start looking into this, and we do think that there will be another rate cut in the near future. And then we have to see if the market likes that, which I think it would. And I think that would help also set the stage for the market to move up. So that's kind of my idea. We'll have to see if it's going to happen this week. And then some little updates here. Remember, for those of you who trade FNGA, it is being switched. So FNGA is being switched to FNGB. I knew this was coming up. I figured that they were just going to port you over, which they are. But what I didn't know is that they're going to take a 5-day sample. And it's not just the 5 days leading up to this. They're going to take like a dotted 5-day sample of the value, and they're going to average that and then move that over. So it's really best that if you're trading FNGA or have any of it, just sell it and then switch over to FNGB and then just start using that. Now eventually they're going to switch back to FNGU again. It's all this kind of stuff. They wanted to change their how much they're getting paid and their fees and stuff like that. So this is how they're having to do it. So just public service announcement, you need to go over to FNGB. All right, then let me talk about the S&P and why I think that I have 3 reasons that we could actually be seeing the market go to 6,000. One of them being, if we look over here at the monthly chart, right over here, this was a massive hammer candle. Wow. Okay, now I know first of all, we know that the market went down because of tariffs. We also know the market went up because of tariffs and what's Trump been saying and all that kind of stuff. So love it or hate it, this is what's happening with the market. We need to be able to ride it out. And you know what? This is kind of telling me that that was kind of a flash in the pan. And most likely, I think if we understand Trump and what's happening, he's going to try and get a deal. That's what we're going to try and do. We know that 145% tariffs on China are just not sustainable, not for America and not for China. China's having their own issues too. They don't like these. And so everybody wants the tariffs to come off. They want the negotiations to happen. So I think the market's really just looking for good news. And as soon as we continue to get good news, I think this will go up. But that was a technical sign that the market really bought the dip. And I think that we're looking pretty good for now. So that's one. And then if we come over to here and we look at this, there is a measured move from here, and from there to the top, about 6,000. So there's a measured move. I'm looking at that. It's not something I use too often. I have some other trader friends that do this, and their measured move goes to right 6,000. 6,000 is a number, big round number. Seems like a pretty decent target. The other thing I like to look at is I like to use these third ATRs. And you can see how, yes, we can go outside of them, but a lot of times price goes to them. And so I can use it also from a target standpoint and as a resistance standpoint. And that's where, as price continues to move up, this is also going to then move up a little bit. So I figure by the time they meet, it would be about 6,000 is where that third ATR is probably going to be. Now, I don't necessarily think price is just going to come right up here. I mean, of course, if Trump comes out and says something like, no more tariffs. We all negotiated. We're good, and everything's fine. Sure, the market could go literally straight up, but I don't know when that's going to happen. And so, from a technical standpoint, we're starting to get a little extended. We are coming into just some prior congestion, and I'd love to see this thing actually pull back a little bit, consolidate. As I said, early next week, I think would make a lot of sense because of FOMC. The market kind of pulling back, leading up into a big unknown event like that. Plus, we had ServiceNow, we had Meta, we had Microsoft with big earnings, and not that they're extended, but probably at some point they're going to have to digest those moves. And so I'd love to see these things kind of just chill out a little bit before we take the next move to the upside. The other thing that we can talk about is there's this Fibonacci from the top to the bottom. We have sailed past the 50%. And usually we go to the 618, but we didn't just go to the 618, we actually went beyond it. And so this is another indication that the market's actually pretty strong. And so while we might run into some resistance and pull back, like what I'm looking for, I do think we're going to continue to go higher because the market, again, just went past the 618. So this is actually looking pretty good in this situation. So that's kind of my target and my reason for 6,000. We'll see, maybe 5,900. We'll have to kind of play it by ear as it goes. But we perfectly nailed the 5,700 level that I was looking for. So if you're looking through here, I showed you guys this last week. This was the trade that we put on. It was a butterfly. I was targeting 5,700 and I just gave myself 24 days for that to happen. This happened much faster. I mean, look how quickly the market got up to 5,700. So I definitely gave myself plenty of time for this. We cashed this in on Friday when we got that gap up for 265% gain. This was fantastic. So I had a pretty good healthy amount on this. I know a lot of people did too. And so that really helped our bank accounts, didn't it? So yeah, 265%, and you can see we perfectly hit that 5,700 target that I have. And now I want to see if I'm going to be right about a 6,000 target, because that would be pretty fun. I hope I'm right, because that would be fantastic. If I'm not, then we're going to have to see what comes next. But yeah, so far so good. And then let's see. Let me also show you this. I was talking about looking for a pullback earlier this week, right there. And what I did about it is we were all longed up. We had a lot of long positions, and I was like, man, I really think the market is going to pull back. We've got earnings coming up. We've got econ data. I'm not confident that this market is going to keep going up. So what we did is we put on a short-dated call credit spread as a hedge to see about this. And I said, I'm targeting the S&P to move closer to the hourly 50, basically by Wednesday. I was looking for that. So my range was kind of 5,400, 5,360, something to that extent, and that's why I put it on. Now, I got to say, the market was continuing to be strong on Tuesday, so I actually took off my hedge for a small loss, and then amazingly, I was totally right about the move, and we got the market that plunked down on that Wednesday based on the GDP numbers. And I was so frustrated because oh my gosh, I had the hedge. I was totally right about that. We got the pullback. But then the other crazy thing was that it didn't really pull back as far as I thought. I mean, you can see here we went to, I think, 54.30. So pretty close to the hourly 50, which is what I was targeting. But that hedge that I put on only worked in the first 45 minutes of the day. After that, the market kept getting bought up, and closed at the highs by the end of Wednesday. So, I love when a hedge doesn't work out because that means the rest of your positions are doing great and clearly the market's doing healthy. So it's pretty interesting to see that, yes, I got the pullback dip correct, but also that the market was very strong and got bought right back up. So I was happy to see that. Clearly, Meta and Microsoft jumped up like this and carried the market. I have more that I'd like to talk about Microsoft as well. So let me carry on with this and we'll get through some of these things. Obviously, the NASDAQ is looking good. And if you see here, it is also higher. So you can see here, it is already basically back at its March highs, which is great. We're seeing that tech is strong. So the NASDAQ is strong. It's up here. But again, it's getting a little bit stretched in through this area, and I could really see a small pullback. I'd love to see a pullback. So you can see here it's at a previous price area. It's also at the daily 200, and it's getting a little extended. So let's see if we can kind of settle in early this week, and then we'll see how the market reacts after that. And then let me kind of come back here. This is the list that we're going to be going through if you guys want to take a screenshot with it. Then we can talk about the IWM. And the IWM, as you can see here, is lagging, and that makes sense because it's the small caps. The small caps need a certain environment, market environment, in order to really excel. We were seeing that environment at the end of 2024, and that's when I was able, I took a small $25,000 stock account and I more than doubled it. I think I got up to like 156% gain in 5 months. And that's because the small caps are running. It was a really good environment for that. And right now, even though they've turned around, they're no longer in a downtrend, the market is moving up. They're lagging just because this is not a great environment for small caps. Interest rates still need to come down. There's uncertainty still with Trump and the tariffs and all that kind of stuff. So a lot of things like the small caps are still licking their wounds basically and trying to get healed. But I think eventually these things can start rallying again, and we'll see when that is. But we just need a little bit more certainty from the market before we can start seeing the small caps do their thing. Then we can look at the Dow. And this is looking great, but this is another reason why I'd love to see a little bit of a pullback. You can see here we're right at resistance right there. We're also at the daily 50. That's another kind of thing of resistance. And then look here, the perfect pullback into the hourly 50. This was another reason as to why I said I think the market needs to pull back sometime next week or last week. And it did, because if you look here, this is another pattern that I talk about all the time. I teach it. It's in the Moxie room. I'll give this away a little bit of a freebie for you guys out there. But look at this. 50, 200, 50 maneuver, perfect. And then once it tested, it acted as support, and now you can see price is higher. So everything is looking great, and I think it's just a matter of time before things continue to go higher. So that's the Dow, and then we can look at the semiconductors in through here. Now I'm trading SOXL in through here. We've got a nice position on that. I'm seeing a lot of volume come into it, so I'm pretty happy about it. You could make the argument that this is lagging a little bit too, like the small caps. But I have a feeling that if there's kind of news that comes out from FOMC about lower interest rates, I think that's going to be good for semiconductors. And then honestly, if Trump says anything about tariffs and any trade deals, semiconductors I think are going to be playing catch up. I think that there's going to be a healthy move in here as soon as anything good news, any good tariff, trade negotiation news kind of comes out. The other thing is I can definitely think that we come back up here to the March highs, something around that area. That would also line up close to the 30 ATR and the 200. That is another typical spot that I look for, is to price to get up to the 200 when it's down below here. So that's why I'm looking at these other indexes and sectors to kind of show me the path of where I think the SPX could go. Because if the SMH can get up here, then the SPX can get up to 6,000. I'm going to show you that also with my idea with Tesla and how that looks going forward. Okay. So now let's get into breadth. This is another reason, another gauge of what I'm using to look at the market and tell me that I think the market is getting a little bit frothy and right here, and we could use just a bit of a pullback. If you look here, this is the 20-day SMA breadth. This is the number of stocks over their 20-day SMA. It's doing fantastic, isn't it? It went from 10% to 86%. The only problem with this is when you look, it doesn't go much higher than, high 80s. Maybe you can get to 90, but at that point, there's no place left to go because everything's up, okay? And when everything's up, there's nobody left to buy, and we need to have a pullback. So this doesn't mean it's imminent. It just means we need to be a little bit aware and a little bit cautious that basically everything is up. It's a little bit too good out there, which I know is crazy to think, but it's too good. And we should probably look for just a little bit of a pullback. It doesn't have to turn around right away. You can see that it does stay up here for a while. It can oscillate for here for a while. But it's good to know, hey, maybe near term, getting a little bit overdone on the long side. So that's what I see with breadth. And then if we look at the put call ratio in through here, and basically this right here, since the put call ratio peaked and is now coming down, this is telling me that the bottom is in for the market. Okay, this is fantastic. This is what we wanted to see. Put call ratio spiked. Now it's starting to come down. And the put call ratio, though, has not bottomed. So we don't have to worry about a market top yet. This is still coming down. This is still trending the way that it should. It doesn't tell me that we need to be fearful of the market topping or anything quite yet. And so I'm pretty happy with what we're seeing here. And then the other thing is we can look at the VIX, and we know the VIX had a massive spike up to 60. And again, that pretty much signals a low in the market, and that's turned around. So now this is looking fantastic. The only little things that we've been seeing are little bounces into the hourly 50. And that all lined up. Like this little bounce was that thing on Wednesday that I talked about. I said that's why I was expecting the market to pull back, because I thought this might bounce. And basically it bounced right around the daily 50. Again, makes a lot of sense. So as long as this continues to trend down, I think the market will look good, sideways to up. And I don't see anything here that tells me that this wants to go higher, which is good. So if this looks like it wants to start going higher, that's going to be bad for the market. But right now, I don't see any of that. So this is also looking very nice for the direction that we want things to go. All right, so then let's get over to kind of what's happening with Meta and Microsoft and kind of how they're going to be talking about where I think the market's going. Clearly, you can see the market's okay with whatever's going on or whatever they said in the earnings call and earnings report. Meta's doing great. You can see we've had a big move. I do think we can go higher. I have generally been targeting back to our March areas. I don't think it's going to go in a straight line. Maybe it has to digest this, and then maybe we can go a little bit higher. But this is another reason why I think that the market could go higher. And then if we go to Microsoft, now this was another big deal. This is a really, really big move for Microsoft. And the reason that this is important, specifically from Microsoft, is because of what they were saying in their earnings call. Okay, a lot of people out there, analysts and market people in general, were really concerned, especially with the Chinese DeepSeek that had come out. A lot of people were concerned that the whole AI thing was overdone, overblown. The build out was too much, and it was a problem. And so the fact that Microsoft came out and said actually positive things about AI and their data center build out, that they were not overbuilt. Yeah, a lot of people were thinking that it was overbuilt, but they were not. They actually, I think the news is that Microsoft said, hey, we built a lot of data centers in 10 different countries all at once. Okay, so yes, that looked like a huge number, and now it looks like a smaller number because we built them all. They're already done. But now what they have to do is they have to fill up those data centers. So they're like, look, people who write the news, you're misunderstanding this. It's not that we have contracted our data center stuff. It's just that we've built them all, we're done, and now we have to fill them up. And so, yeah, it was not overcooked. And so now we're seeing strength in semis, nuclear power, and Bitcoin miners, because basically they're like, oh, okay, I guess the whole AI situation and data servers and all that stuff is still fine. It's a fine deal. So I think that really helps the narrative. And that's why we are trading Bitcoin. That's why we're trading something like OKLO. And that's also why I'm looking at the semiconductors, because I'm seeing these things head higher. All right. Now I'll talk about the dollar and gold situation, because I think this also helped mark the bottom of the market. But if we come over at Apple, Apple, I think Apple is kind of having its own issues. I think there were some lawsuits or something like that going on. And we know that they're going to be trying to get out of China and into India. So they're down. Again, it's not really too concerning. I think they were a little extended, actually. And this pullback actually might end up being a buy the dip opportunity if we can see this thing start to turn around. Basically, I'm not too worried about this right now. So I think, again, they have kind of their own reasons that they're down. And then if we look at Amazon, it was down overnight on their earnings, but they came right back. So I think this is another thing. Now, they were originally probably down because, tariffs and all that. But I think the idea that tariffs are going to get backed off and we're going to be fine is keeping Amazon afloat. And I do think that we're going to probably see this continue to go higher. I would love to see if we can get Amazon back up here to the March highs. That's again why I think this market can go higher, because things like Amazon, Netflix is up, Microsoft is up huge, Meta I think can go higher, Amazon can go higher, Google can go higher, and so I think the market can go higher. All right, then we have another thing. Let's go to Reddit, and let me kind of switch over to this chart. Let's see, this one. There we go. Okay. So here's an interesting thing. Now, we're already in Reddit. I added to Reddit. It did go down by the end of the day. That's fine. I think we're going to be in a range. Here's an interesting thing. If you look at the overnight, look where price went based on earnings initially. Now, most of the time, the top of a move or the top of a stock price usually doesn't happen in the overnight. So the fact that price went all the way up to 140. Look at that, it went all the way up to here, I think indicates that actually this wants to go higher. Now, maybe it doesn't want to do it right now. Maybe it's going to pull back a little bit, but I do think that this is going to go higher. And if we possibly look at some Fibonacci's, I'm also kind of targeting that. I think that, it's funny, I was just looking at this, eyeballing it, and I thought, okay, there's a big congestion level here. That's probably a decent place to see price go. And then I put some Fibonacci's on it, and it's right between the 50 and the 618. So I was like, okay, I guess we're pretty much spot on. I don't know how quickly it's going to get there. I don't know if it's going to take 2 weeks or 2 months, but I have a feeling that we're going to see Reddit again back up to about 160. So, fingers crossed. We'll see if that actually happens. Okay, then Hood, Robinhood, also, in a way, I think this has a very similar chart to Palantir. Obviously, Palantir has been taking off and doing great, and they have earnings coming up, so we'll see what that does. But basically, there's kind of this little double bottom situation, and now we're back up. So I think Hood is looking fine. Overall, the monthly, weekly charts are looking good. It was up and then kind of sideways on earnings. I think the fact that it's just hanging here is also fine. This is what I'm saying about the whole market, is the whole market had a big move up like this, and I would love to see if the market can kind of just pull back, flag, consolidate the same way that Hood and Reddit are doing. If the market can do that, then I think we're golden. I think this is going to be great. So then let me show you Tesla, and it's kind of giving me the same general idea as to what's going on also. Now, Tesla was looking pretty great. Friday, looked like it was kind of coming up a little bit, but I didn't think it was really going to explode or go anywhere serious on Friday. It just wasn't going to do it. I think the market's needing to do a little bit of a pullback. But look where Tesla is. It's right at the daily 200, and it's also right at a previous spot. So I don't think it's ready right now. Maybe sometime next week. Remember, I think the market's going to pull back early. We have FOMC. We'll see how things go. But I'm looking at this as basically a price pop up like this, a flag, and then I think we go higher. And that's the other thing. This is another reason why I think that the S&P is going to go higher, is because I'm also targeting Tesla into that area, very similar to Reddit. And if Tesla can get up here, it's not going to necessarily do it by itself. It's going to need market support. So I think the market's going to go higher. And basically, if Tesla can go here, SPX can go to 6,000. Or if SPX can go to 6,000, then Tesla's going to go here. It's kind of like they're tied together. And that's why I think we could see higher with the market. All right, and then let's get into GLD. Obviously, GLD has been a very, very hot trade and a hot sector, but it got overdone. And look exactly where GLD topped out. It was when the market bottomed, didn't it? So it was basically a hedge. It was a flight to safety, all that kind of stuff. This last big move was happening when the market was going down. It was a flight to safety. Money needed to go someplace. And you know what? I talked about this easily 2 videos ago, and I said, hey, what if gold starts coming down and the market bottoms, and basically gold as a hedge, as a flight to safety, has done its job, and now people are going to be taking their profits from gold and putting them back into equities because now they don't need a safe haven. And that's why we shorted GDX. You can short gold, you can do whatever, but you can see here, there's the Moxie price trigger to the downside. It was very extended. It's getting rejected by the hourly 50. You could just see everything starting to come down, down, down. Fantastic. So it's working for us. I do think this is going to go lower. I don't know how much lower. And I also don't know if this is the end of the gold move forever. Okay, I don't know if this means like it's totally done or just done for now. So I'm not willing to talk that far into the future. But the other thing is, if you look at the dollar, so the DXY, this was another reason why I said, hey, I think gold is going to come down, because yes, the dollar went down when gold was going up. That's how these things work. But then look, we started to see inverse head and shoulders. Here's the Moxie price trigger, and we started to see the dollar bottom and actually start moving up. And this was another clue and another indication that gold was likely to start coming back down. And so the way I decided to do this is by shorting GDX. And the way I shorted GDX was I bought GDXD, which was the leveraged inverse ETF. So we shorted it right there. We had to take a little bit of heat because it popped up a couple times. But now you can see here it's broken down. It's bear flagging into the underside of a downtrending hourly 50. And basically my target is back to the daily 50 for GDX. And on GDXD, we're already plus 18% positive on this. I'm looking for maybe we can get mid-20s, maybe 30% gain on this move using just stock with these leveraged ETFs. So that was another thing. Oh, let me show you what that looked like here. You can see here I started I was talking about this before, but even on the first, I said, hey, right on cue. Gold topped out as the market bottomed, and the dollar held the hourly 50 and starting to move up, and that's putting pressure on gold and GDX. So our GDXD trade is working well. We're plus 18% so far. Yeah, silver actually took a little bit longer, but it's coming back down also. And so basically everything revolving around precious metals is starting to move down, and that's what it's looking like. Now, one thing I did actually forget, here you go, I'll just show you this. We started to cash in some trades. So we cashed in a 27% gain. We only took half off because I do think the market will go higher, but it looks to me like we could be seeing a bit of a pullback. But we took a 20% gain cash in on BitX, which is the leveraged ETF of Bitcoin. And then FNGB, FNGA, whatever, we added to this ETF just before the Microsoft and Meta earnings. And from that point, we made 15% from that extra entry. But from our original entry, we are up 68% from our original April 9th entry. So we have been trading this thing on and off and taking profits and adding back to it, and we have just been absolutely killing this thing. But we're plus 68%. I think we were plus 30% on another trade, plus 15% on this last one. And so I just said, hey, I think the market's going to pull back a little bit, so let's take half off at here, 15% and plus 68% from this one. So I'm really looking forward that if the market does pull back, I want to get back into this thing. Like, we still have a piece, we've been trading around it, but this thing has just been paying us like crazy. It has been a fantastic name for us. It's a great way to basically trade the market using just stock with leverage, and I love it. It's one of my best tickers that I trade, and now we just switched over to FNGB. Okay, so thanks again, guys. Hope you're enjoying it, and let's see what we're in for next week with FOMC and any kind of news that comes out. All right, remember, simplertrading.com/Moxie, and we'll see you guys there. Take care.